This is the Friday, December 4, 2020 version of the Market Plus segment. Joining us now, Senior Market Analyst John Roach. Hello, John.
Hi, Paul. Nice to see you.
Good to see you. You know, I got to tell you, and I reviewed one of the old segments that we did back in February when I said, boy, it was cold. Glad to have you here. It's like almost 50 degrees here in Iowa, so see, you missed out on good weather.
Last time I was in Iowa was over the Valentine's weekend, and it's back cold again.
I know, it's the way it's gone, and we have been stuck inside. We've been stuck in ranges. We talked about cotton in a range. We've also been stuck in some averages. In soybeans specifically, 20, 50, 100-day moving averages. We're kind of right there. We're still moving higher, but why are we stuck in average? Or is that a good thing that we're in average right now?
What it really says is, at the moment, the traders don't know exactly what to do. And we look closely at the 20-day moving average to see short-term price direction. And if prices are above the average for the past 20 days, then you're rising. And if it's below, then you're declining. And right now, you're right at the 20-day moving average on both corn and soybeans, or very close to it. And what that suggests is that the traders are waiting for the next piece of news. Now, the piece of news that came in this week was news that there was rain in South America, better rain than was expected. And more rain is in the forecast out for the next couple of weeks. So that put pressure on the markets. We also saw we lost some of the export demand. We've had very brisk demand, and our export sales this week were disappointing compared to what we've seen, particularly in the case of soybeans. And then the final thing that we have to watch are the spec funds. Spec funds were the big buyers, started early, helped carry the market all the way up, were joined by the Chinese, but they left the party. They're starting to leave the party. They started to leave actually a month ago. Spec funds had their largest net long soybean position a month ago. This week, across all the crop markets, spec funds sold a net 50,000 contracts. So the people who brought us up are now starting to take some profits, or at least were this week and have been over the last few weeks here. So the question becomes one of, are we going to see something new come in to carry us on higher, or do we have to settle back down until we find some solid level of support? And I think that right now, the reason we're at the 20-day moving average is the price, we're just stuck right there because people they don't have enough courage to take it higher, and there's not enough pressure to take it lower right now.
Our friend Dan Huber wrote in his newsletter this week, he cited on November 30, it was Samuel Clemens' birthday, Mark Twain, and he pulled out one of Mark Twain's sayings, which is something similar to what you say. Mark Twain, whenever you find yourself on the side of the majority, it's time to pause and reflect. I tie that to everybody's on one side of the boat. Do you think the Chinese and the speculators, let me get that said right, looked around and said it's time to get to the other side of the boat?
Well, that sounds kind of simple, but yes, I think that's exactly right. They're doing it with different ideas and walking across to the other side of the boat. It's more a matter of the technical indicators started to, first of all, they stopped going higher. The Chinese said they really are starting to back away from beans a little bit. In fact, they canceled or washed out some shipments 2 weeks ago. So we've seen some pretty strong signals that for a moment at least, they're done with their buying activity. That doesn't mean that they don't have more to buy, but they just at least paused if didn't come to a stop for a little bit here. And so we've got to work our way through that process. And we have other buyers coming in. We saw Mexico come in with buying corn. And so we have other buyers there, but it's hard to keep pushing higher and higher and higher without some more positive news. And the positive news that had been stimulating was the weather, and the rains came, and that changed.
All right, let's get a couple of specific questions that came in from viewers this week. This first one's off of Twitter. Rudolphi Farms is asking you, John, what's your advice for re-owning soybeans in the absence of a buy signal?
Well, a good bull market is hard to get on board. We like waiting for buy signals because we know that they're developing some sort of a bottom in the market. At the moment, we don't have that in the case of corn or soybeans. And so if you're going to come in and buy soybeans to replace some ownership, purchase slowly and lightly in here, because, as I say, the trend of this market at the moment was up. It topped and it started to move down, and now it stopped at the average. That's not a positive situation if this market starts to go on further south.
Okay, we have two questions about ethanol. I'm going to kind of morph them into one. One was about DDG prices. The other is from Start Falling Down on Twitter. What will be the fuel ethanol price trend for Q1 or Q2 if vaccines are successple?
Well, the hope we have is that we will start to be able to live somewhat of a normal life. But but what we're hearing this week is that the Biden administration is talking about 100 days of wearing a mask. And my guess is when they get done adding all the things they want you to do in that 100 days, we may not be driving our cars all that much. We'll have to wait and see. Right now, we're running in the neighborhood of 10 to 12% down on total gasoline consumption, because we're not driving the miles that we used to drive. And for a moment, that doesn't look like that's going to change. The ethanol manufacturers, processors are not making any money. Some are starting to slow down again, close some facilities, and the forecast out into the first quarter is not very bright right now. In fact, it's a little bit dismal. One of the things about having high meal prices is that helps with higher DDG prices, but we're getting pretty good DDG demand, and it's still hard for the processor to make any money.
So do you see that ethanol and DDGs are going to be tied together, given what you just laid out there in Q1 and Q2?
Well, they always are. I mean, there's several components to the margin of profit, and the DDGs is a very important component. And as long as we have relatively strong meal prices, then that definitely helps the crush.
All right, Matt in Amherst, Wisconsin asked you a question, John, and this one's about locking things in for 21. Should a person lock in some 21 corn, beans, and wheat right here?
Well, we're dealing with a weather scare. We've had sell signals, although we've lost those corn and bean sell signals and wheat sell signals now. But those decisions really should be made based on your P&L. Now, we've recommended making some sales. Just some small sales, beginning sales. Those of you who don't have enough storage to be able to hold the new crop, and you're going to need to sell out of the field, making a few of those sales at price levels in here that make sense to you, we think that's good. We also think basis will be very good next fall, and so we like doing it as a hedge to arrive to be able to take advantage of some basis improvement. We're going to have very tight supplies before we harvest on beans. Corn, we don't know that yet. We don't look quite so tight, but we think farmers will be tight holders until they get certainly into the growing season to see what they have as far as weather conditions are concerned. We're worried about dry weather across a good part of the United States, so there's nervousness out there, and so pick and choose your places to make sales and base it off of the P&L of the farm operation.
Your profits and your losses. Is that what you mean by P&L? I want to make
P&L,
sure.
yeah, yes. on the profit level.
Yes.
Compare what you're able to do with what you've had to do for the last half a dozen years. And if you're able to do something that works on the farm, maybe those decisions will be more valuable decisions than whether or not prices are going to go up or down.
So Paul in Sioux Valley asked, and you don't need to put the question up, but he kind of answered your question right there. The best advice for 21 is know what your profit is. So I want to switch. We got just a couple of minutes left here, John. There's some great questions, Aaron. I'm just not going to probably get to yours or William. But let's talk with Shane in Bloomfield, Nebraska. And he sent us this via Facebook. He said, if prices stay about where they are for commodities, will we see record acres planted in 21, and where could prices be supported in a high acre and above to normal demand picture?
Okay, I think the first thing as we look forward, we have to kind of have an idea about demand. And I think the demand is going to be very strong as we move out over this next couple of years. We choke demand back about as far as you can choke it back. And now we're on the expansion mode. Having China lose most of their hog operation, and now they're rebuilding the hog operation. They're doing it in a commercial structure rather than the backyard. So they're using the proper feed rations and so forth. That's just going to be strong demand growing out forward. We have to have big crops in this country. We have to have big crops in South America. So I think we are in a demand growth stage. And I think, and as you're marketing, think about positive kind of prices out forward rather than think we're going to go back into the hole. I'm a positive person out forward on this demand, and so I think you've got to make sales when you get the opportunities. You get the sell signals up here at these higher price levels, but don't sell out of fear. I don't think we have that kind of market.
It's a good note to end on. Is there anything else we missed? Did I cover it all? That's it, right?
We covered a lot. That's
We
for
did.
darn sure. Well, we covered a lot.
Good
We
to
covered
see
a
you.
lot.
Good to see you, John. Thank you so much.
Thank you very much, Paul. Nice to be on.
All right, that's our senior market analyst, John Roach. Next week, we'll look at movement around the latest government report and what that report tells us about going into 2021. We'll have a doubleheader market analyst session with Naomi Bloom and Matthew Bennett. Can't believe I'm about to say my name is Paul Yeager after that exit, but it is. Thanks for watching, listening, or reading. Have yourselves a great week.